So we start with insurance. What is insurance? Well, first you have a customer. And the customer is going to pay a premium to be insured, and that premium is going to go to a company. And that company is going to hold on to the money until there is an emergency. And then in the emergency, the customer is going to get a payout, right? And so they can pay their bills. So this works with car insurance, it works with fire insurance, right? This is a very common practice we're all aware of and we all know. What some of us may not know is then the company side, right? Those companies actually take that money and make an investment. They gamble with that money in the stock market. So when the stock market goes really, really well, they make lots of money. But when the stock market does poorly, they don't make as much money. Now those investments that they make then have to pay off for their investors first, because for a private company, their primary obligation is to take care of their shareholders. So those shareholders want a return on investment, so the first thing they do is pay off those investors. In order to do that, they have to do advertising, right? You have to spend money to make money. So they want to go out, and you've got insurance companies competing with each other, and they spend advertising dollars. And in order to do that, they have to hire agents, and those insurance agents then get a commission, right? Because they're not working for free, they want to work for some money. So all of these things have to be paid out before you pay this emergency bill, right? That company has an obligation to this side of the house before this emergency money goes out. Because they're in this to make a profit, right? They want to make profits. They want to invest their money at a risk, make a profit. This is what capitalism is. So how do they make a profit? One way is to spread the risk. The more customers they have, the more healthy customers they have, the more safe drivers they had, they are pulling in more money than they're going to spend out in times of emergency. They can also make a bigger profit if they charge higher premiums. So they are going to maximize for their investors that premium that whatever the market would bear. Now, if you are sick or you are reaching old age, how much do you need that insurance? And how much are you willing to pay for your health? Is it something like a pair of shoes where I can go without a pair of shoes? Or is it a necessity where if you are charged and the only way to get insurance is they keep raising that premium, you're going to sacrifice everything else and keep putting it out because that company is going to charge more. Now on the emergency side, they want to lower their payouts, right? Private companies make money by not paying claims. So they will fight with doctors, they will fight with patients, they will fight with hospitals. They will pay a lot of money to their own employees to deny coverage because that's how they make more money. Now, once again, this is not a hidden fact. This is how they operate. But what if we have public insurance? What have we just done? We have eliminated this whole side of the equation in terms of profits. We've eliminated investors. We've eliminated advertising. We've eliminated commissions. Because now you have public employees selling insurance, and their job is just like a teacher. Their job is just like a firefighter. Their job is just like any other public servant. They're not working on commissions. They're not trying to make more money off of you. They are trying to deliver a service at an affordable. We know the payouts can be higher, which means that you, as an American, can pay your bills easier. That's how public insurance works. This is what FDR discovered in the 1930s when he first introduced Social Security. And how many people in America want to give up their Social Security? Their single-payer, federally mandated, old-age socialist insurance. Even the Tea Party doesn't want to do that. Why? Because it makes common sense. A private company cannot deliver what public insurance can deliver at the cost that's out there. It's affordable insurance that we all promise each other. Public insurance.